Star Daily with Phil C.
I have, look at this, I have a, can you see this? Ooh, a Star Prosper coffee mug. That's what I have. I've got one of those. And coffee is good. Coffee is trading fuel. Did you know that too? Alright. Are we recording? Yes, we are. Today, I don't really have anything for you today. Yeah. I don't have much at all. What you see in front of you, I'm just going to go through the pairs right now. But from what I've just gone over, I don't really see anything. I just missed out on a trend continuation trade here. Why am I missing these? Well, you know, I'm not at my station. I'm doing some other errands. Errands. And then, you know, sometimes we miss these. I try to be in front of the charts when I'm supposed to be. But when you're doing other business things and helping clients and things, and you know, I'm blessed to do that, that can sometimes throw you off a little bit. And then this sort of thing happens. Oh, that's actually a good lesson in on itself today. Make sure that when you're trading your plan and you're in the window of trading when you're meant to be, that you are doing that. Do that. so you don't miss out on potential opportunities. It's a good lesson. Because I'm on Eurodollar 4 hour time frame here. And we got a winning bat pattern trade in here. See? I have a winning bat pattern trade in here and draw it out for you so it's easy to see. Like this. So price action, everyone knows that this is one of the most traded strategies that I do. Bat pattern trade. So price action did come up into 886. And then with targets, if we draw a Fibonacci retracement tool, with targets, you've got 886 entries and, you know, missed out on 38 pips for target 1. And let's say 73 pips for target 2. So missed out on that. And then we came down and look at this. Draw it up again. We already covered this actually not too long ago. You got something like this. Okay. And then you're looking at a trend continuation trade towards the upside for 88 pips right up about here. See if we can get there though. Right. May fall short and then drop off all the way down to around this level. Right here. Setting up a bigger pattern in the process. Like this. So this can happen as well. Just so it's less confusing. Like that. So you got an M formation here. Probably a Gartley. Yep. Gartley pattern opportunity right down at this level. So that can happen. We can, it just shy of this level right here and completely drop off. Anyway, we try and catch the next moves. Yeah, so nothing going on with the euro dollar. Euro yen, I was looking to get short last night. Nighttime, my time. New York session. I was trying to get short up around here. And I was just short of a shorting opportunity. And then it just ran off without me. And then right now, euro yen. What's happening? 618. 618. Oh, maybe we do have something here. Do we close above? No, we don't. Maybe we do have a Gartley pattern here. If I sell now, because meant to be selling at the 127. If I sell now, we are currently in a sell opportunity because we didn't close above right there. So you know what we're going to do? We're going to short this actually. I thought I had nothing on the table. So let's go this and let's go this and sell the 127. That's one target. Second target right there. Okay, stops. Where are stops? Let's get rid of this and draw it out properly. Fibonacci swing high to swing low right here. Yeah, stops are at the 113 right there. So that's one target, two target. One contract, two contract. Might get stopped out, but you know what? We're meant to be in this trade at the 127. Fibonacci extension right here. Yeah, entries would have been at 127 down there. Okay. So if price action has pushed up, I've already said this quite a few times in my videos. If price action pushed up into this box here, then you're looking at a sell zone, right? So anywhere within here is a valid selling opportunity because right now we do have right here. Yeah, because right now we do have a valid Gartley pattern. Well, look at that. This is Euro Yen, 15 minute. So it's an intraday trade. And we have opportunity to give some money back to the markets. Or go on and hit targets. So let's do that right now. Fibonacci non-extension, retracement. Swing low to swing high, right up here. Yeah, looking at a 1-to-1. Yes, we are. 1-to-1, target 2, and then 618 down here. Like this. So we'll see, because we do have a CD completion right now. We'll see if we can get moves down into 382s and down into 618s. If we can't, then we'll hit our stop. We'll get out of it. And then you know what? We'll look for some long opportunities. And see if we can ride this up by the looks of it. Don't know what's going to happen from here. But yeah, if I see a pattern, I need to get involved. So look at that. Pound dollar. Nothing going on, but you have this similar thing here, right? So got this. We covered this in both Star classrooms. Okay. Got your stops down here below swing low. Just a little bit further to be fair. Buying opportunity right there. And targets would be at a retest of these highs. Okay. Like this. Now, it's, you know, it's way too late for me to enter this, obviously. And then your extended targets. Fibonacci extension here. Target 2 would have been at a 127, retest of the highs, looking left at structure. What do you know? That would have been a good trade. 50 for 90 and 141. Wasn't meant to be. Yeah, not really looking at anything there. Pound yen, wasn't anything on here. Dollar yen, 1 hour time frame. We were looking at this pattern opportunity. That also wasn't meant to be. So nothing happening there. The trade that I got out of, a lot of people would say, why did you do that? It went on and hit targets. Well, in hindsight, yeah, great. But I don't trade in hindsight. Do you? So, you know, we don't trade in hindsight. It's, a lot of people say, why did you get out? You know, you were short and went on and hit targets. But no one would have said the same thing if we went on and hit stop, had a pullback, and then went on and reached these highs. Then I would have looked like a genius, right? Now, that's what happens sometimes when you put your trades out in public. you're at risk. You either look like a genius or you look like an idiot. But that does happen when you're putting things out in the socials. But I did the right thing because price action did come up into a potential sell zone. And then we already came down and hit potential targets where I was looking. So I stick to my rules. So why did I get out of this trade? Well, we came up and hit our sell zone, and then we've already come down and hit target. So that signals to me, that indicates to me that the move is done, right? So then I can't take it. Whatever happens after the fact, I don't know. But as long as I stick to my rules and execute the trade plan with consistency, that's all that matters to me. Yes, because I would like price action to come up into our sell zone, trigger my orders, and then hit my targets. They're the probabilities that I'm trading. They're the probabilities that I want. Not when a bat pattern reaches the 886 and already hits target and then comes up to my entries. I'm not going to get involved in the trade anymore, because to me that move is done. But what happens sometimes with the bat pattern, it puts in a double top and then straight away shoots down or up, depending which way you're going, into double targets. That does happen, right? But once the move has been done, I consider the trade complete. So then I need to look for the next opportunity. This, after the fact, everything else that happened afterwards, doesn't matter to me. It could have went up here and I could have stopped me out and went up here, and then I looked like a genius and I saved not just 18 pips, but I save about 50 pips. Awesome. Great. But in this case, it continues to roll over. What are you doing? Why'd you do that? Etc. etc. You know, hindsight can be good for that. But yeah. So with this trade, what I'm looking for, let's get rid of this. This trade, what I'm looking for is price action to come all the way back up into this level right here. Then I can look for a selling opportunity, right? Sell right here. So we continue with the trend. We follow the trend, right? Sell right there. Stops above the swing high, like this. And then targets at a retest of the lows. Right here. So we want to look at a 1-to-1 for target 1. And then potential target 2 at a Fibonacci extension at the 127 right here. Okay. Now, following on from the previous example, let's just finish drawing this in like this. Following on from the previous example, I don't want to execute the trade if we've already come up and hit this level and come down and hit targets. If we come all the way back up into my entries, I'm not going to sell it again because the move's already complete. Therefore, I need to look for the next trading opportunity. Okay. You have to stick with what you tested. You have to stick and not change anything. What you're trying to do is mimic your tested results with your live results. Okay. Because that is what brings in the profits. That is what you're meant to be trading. You need price action to hit your entries, then hit your targets or hit your stop. That's it. If it already hits your entries and your targets and then you catch it late, well, too bad. You can't just get involved again. Right? Because the initial move is finished. So with the one that happened to me the other day, my orders were already resting. So that's equivalent to this. I can't just enter the trade again. That's why I had to get out of it. For those who are saying, why? All right. So that's what I'm looking at here. Next opportunity. Aussie dollar, 1 hour. Aussie yen. Aussie yen, I got involved in this actually yesterday. I don't think this was recorded, but I will tell you. Spoiler alert, I got stopped out of here. Right down at the 113. So this was a loss for me on the Aussie yen 1 hour time frame. Looking for another move towards the downside. Clearly bearish on this. Right. Kiwi dollar 1 hour. I was looking at this yesterday as well. Didn't. Oh man. I was 1 pip away from entries. 1 pip away from entry on this trade. And then we want to retest at the highs here, which we got. Well, you can see it anyway. Yeah, I want to retest to the highs up here. And we didn't get that. I was 1 pip away from a 20 pip move. So that's unfortunate. Just showing you what happened. So that is that. I can get rid of that now. M formation. What have we got in here? Do we have anything in here? What was this? Fibonacci swing low to swing high. 50. Come down to the 886. Do we hit the 382? No, we don't. Did I miss out on this one as well? 16 for... Yeah, looks like I am missing out on this actually. I could babysit this one. Like in the live room. Yeah, so what I'm looking at here now is the Kiwi dollar 1 hour time frame. This is valid. If I get a move back down, I want to get long. So what I want to do, yeah, 15 pips. Not the biggest trade in the world, but you know, it is a valid trade. Buy zone. I'll just babysit this trade, actually. Yeah, because if we get another press down, am I seeing things here? No, that's right. If we get another press down within here, I'll look to buy it up actually. And targets will be at the 382 and 618 for this one. This is a BAT pattern trade on the Kiwi dollar 1 hour time frame. And then this one here, well, we hit targets on this one. This is a good trade. We came up, spiked into my sell zone. Oh yeah, and we got triggered yesterday. Kiwi dollar 1 hour time frame. We came down, price action came down and hit the 382 right there. We take off half of the contract. We roll stops to break even like this. And then we look for target 2. Whoops. So we get some sideways movement and then bang. We come down and hit target 2. So for target 1, 32 pips, and then target 2, 59 pips. Yeah. So that was a good trade. Happy with that trade. Da, 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 da. Come on. Come on. What have we got? About, yeah, 15. 15. I need to get this video up for you, but I'm just watching this. I want to get entries in here. So go this. Duplicate that. Get a press down into 886, that would be nice. Stops at the 113. Targets at the 382. Target 1, 382. Target 2, 618. Yeah, so just watch this trade. 1-to-1. Risk to reward. See what happens. If we do get filled, if we don't. Yep. Alright, so I'm going to get this video out right now. And if you haven't already, click on the link below the Star Classroom. Watch the Foundation 4-part series. And then head on over to the education area. Because I want you to see the reality of trading first and foremost, before you dive into getting involved in reading the language of the markets. And then working your way all the way up into doing a strategy, testing your strategy, and making profits in the live markets. Alright, until tomorrow, be safe, enjoy life, and I'll talk to you soon. Alright, thank you so much.